Good morning, everybody. It's Monday. We've got the whole gang here. Big thank you once again to Rob and CTO and Marty. The story today is about hardness, the impact of AI, the impact of oil, where is the floor in Bitcoin, what's happening with crypto, what's happening with AI, hyperscalers, Mag 7, space. We're going to cover it all today, including some very interesting angles. But before we jump into all this juice, Marty, what's going on with you?
Good. Great weekend. Very good. Everything in life is good. As predicted. I mean, this band on the markets is very predictable. Obviously, the war is now, I guess, on its third week? Something like that. No major change.
It's a month already. One month.
It's pretty much dictating the news, which always means it's probably a narrative to shield what's really going on. And I guess we'll talk about that today. It's nice to see you all.
Yeah, I'm glad you weren't riding with Tiger Woods at the time. CTO, how are you?
I'm great. Sun is shining. Another week.
Daylight. You can tell the time of the year by the color of the sky outside. Mine is always black, so I keep it simple. I live in a cave. Rob, are we swimming?
Well, yeah, it's difficult to swim on a green screen, but yeah, I mean, we could at some point. Yeah. But right now I'm vacationing in El Paso, Texas, so there's not too much swimming going on, and it's cold. So
yeah, and that's your home away from home.
Exactly. Home is Puerto Rico, the greatest place on the planet. If anybody hasn't checked that out or gone there, it's great. Also, there's no capital gains. So if you like paying capital gains, stay where you're at. If you don't want to, come to Puerto Rico.
Fun fact, I used to do dirt bike riding in the tropical rainforest in Puerto Rico.
Yeah.
This is probably, 90s, late 90s, when I was stronger and fitter. Anyway, let's get into the story. We have a lot to talk about today. And this one is called Is AI Killing Fiat? Not just AI, but all sorts of hardness. And the fact of the matter is, everybody is terrified. I thought this image was incredibly appropriate. We had a very rough Q1 2026. A lot of people were optimistic, but we had 7 gray swans by my count. One of them could be included as maybe a dark gray category. But CTO, I'll start with you first. Are you fearful going into April?
A little bit. I'm uncertain how this war situation will develop. And with that, oil prices, and following from the oil prices, the rates and the profitability of the companies, and from the stock market to Bitcoin, and so on and so forth. So if anyone knows what's going to happen with that, I'm very interested.
In fact, on that note, there's so much to be afraid of. I have been stunned for weeks now that the market is not down further. Yep. This is actually incredible resilience, which is actually a very bullish signal in my experience.
Yeah, I'm especially Bitcoin. Actually, Bitcoin has held up much better than everything else.
Yeah, very strange. Rob, what do you make of Are you afraid of April? First of all.
I mean, there's nothing really to be afraid of. It's just the natural happenstance of what's going on in the world. And the markets don't like ambiguity. And that's why with everything that's going on in Iran and everything else, it's a little bit unknown. But really, if you think about it and you just kind of sit back and say, well, this is kind of where things were going anyhow. So, and then of course, this is the midterm year. So if you're going to have a breakout war, this would be the time to do it. Because as we get into the later part of the year, that's when everything starts to actually usually go down. And we did a show yesterday and we talked about this, and we said 100%, and we talked about midterm years, just like now, 100% of the time since 1942, if you bought the S&P 500 on midterm election day, you'd have a nice return of plus 15%. The next midterm election day is going to be November 2nd or 3rd, I forget.
5th, isn't it?
No, 2nd or 3rd. Anyhow, when that happens, if you were buying down there, it's probably when it could potentially be one of the low parts. And what's kind of interesting is that if you look at the 4-year cycles, like I know some people believe in it, some people don't. October's not a bad month either. So around that time, it could be pretty heavy. Of course, people will say, well, there's this, and that. So far, the only thing that's really kind of held up is like just timing. It's so.
And we'll get to this story as well. For example, from those guys, Bitcoin will go lower, bottom in October, and we'll get to the story behind that later because I've got a theory that's interesting. But over to you, Marty. I want to share this with you. What's your number one concern right now, if you have any? Geopolitics, oil, World War III. When is the crypto bottom? IPOs.
I think you have to say oil-based inflation. I think clearly there's a strategy at hand, and it's to increase the price of oil and to break something in order to create a monetary reset, in my opinion, to bring the world onto digital rails, digital US dollars. We all know about that. So I think this is what's going on. So should you be fearful? I don't think so. I mean, like everything, to me, it's an opportunity to enter and buy discounts. So if you're bullish long-term for the 2030, 2032 areas, 2035 potential exits, this is your time. You've been waiting a long time for this. This is when you're going to get your chance. So if I look at my long-term weekly logarithmic chart, April was always the month in which we probably test the lower accumulation zone, which is that 58 range. And so probably going to happen, and I'll be ready. So I don't see it as fearful. I see it as quite exciting, actually, James.
Interesting. So we have a number of theories going on out there. First of all, there's a couple of things happening with Bitcoin that are quite interesting. One, record whale stacking in the history of the world. The 1,000+ Bitcoin whales have been building very, very large bags very fast, and we're going way back to 2011. Just for some perspective, shout out to James Easton, who's been on the show for this chart, and James Check on chain. What's with all the Jameses? I don't know. But somebody somewhere is sneakily bagging big bags of Bitcoin all at the same time. And we know Michael Saylor has been bought like 40,000 Bitcoin so far in March, etc. Crazy, crazy big buys are happening. But does anybody see anything here? For example, CTO whales, 10,000 plus bags, 10,000. No, sorry, 1,000 plus Bitcoin buys. 1,000 plus whales are buying. And we always know, and Rob, you and I have talked about this for years, the smart money buys when things are cheap, and the smart money sells when things are high. CTO, anything to see here?
I mean, it's no doubt a striking picture. I hadn't actually seen this one before.
Yeah. It's
promising, definitely.
Yeah. So but the question is, and I tried to get to the bottom of it, is it digital asset treasury companies? Other than MicroStrategy, nobody else is buying. But it is interesting. Rob, Marty, any thoughts on this?
I mean, the large participants' wallets have never been bigger. BlackRock's at 785,000, Saylor nearly there. I mean, they've all been buying. Everything's growing. All wallets are growing. I haven't seen any wallets shrinking, except for miners. Some mining companies have unloaded. But other than that, everything's been going up this entire period.
Yeah, Marathon dumped 13,000. They still have about 40,000 left. And yeah, the ETFs slowly, accumulating some. Rob, any thoughts on this, especially with all your whale buddies?
Oh yeah. No, it's a good thing that we have the MicroStrategies of the world balancing this out, because if we didn't, I think there'd be a much more bearish case. Without those guys buying and holding, and like you said, like Mara dumping roughly $1.1 billion worth of Bitcoin so they can pivot to AI, which it's open markets, they can do whatever they want to do. Yeah, I was. It's a good thing we have those companies buying up those bats.
And as I said for a long time too, if it wasn't for Saylor and the ETFs, we'd be down around 30,000 because retail is smashed. There hasn't been retail liquidity to buy and pump this asset at this level. The other thing, let's talk about the 42K dream. And CTO and Rob, for years and years, 42K was a magical number in my mind. And now this is I get this guy's name right. Can anybody help me with his name? Ogora, I think, is his handle, the crypto Bitcoin guy. But he believes 42K is the bottom. this time around. And when it happens, we don't know. His bottom chart goes out to 2028. We shall see. But 42,000 is where we were in Feb 2021, long time ago. And everybody's talking about that 40K, 45K bottom this time around. And I know I'm wise enough to know that when everybody thinks the same thing is going to happen, it never happens. However, Rob, you seem to believe October, 4-year cycle, etc. And looking at this chart, what do you see? Maybe CTO, you've got a chart to say how far away 42K is as well in a minute. But Rob, is that a dream? Is it a pipe dream? Or was 59,500 the bottom? Which is kind of...
Well, first of all, it's a great dream if you took profits, like a lot of us did. This is a great dream. And I think if the people that are watching at home, you can kind of tell the people that have taken profits because we're kind of rooting for this, you know. Yeah. And the ones that haven't are like, God damn it, this shouldn't go down this low because of X, Y, and Z. So for me, like 4-year cycles are still intact, so it kind of works out. I could see 42K coming, but you know, like you said, like maybe that's just it. You know, we get all these people saying this is going to happen, this is where it's going to go, and price predictions, in my personal opinion, are worthless. And I've done a couple of videos on them from 2021 and 2025, and everybody was wrong. So like when we take a look at this, it's good to take a look at it. But for me, I'm not 100% for sure, even though I'm pretty geared towards the 4-year. I still buy Bitcoin every Monday, which fires off on my Cash App. And then as things start to go down lower, I use Ben Cohen's nice little website for these little risk levels. And as the risk levels go down, I buy more. And if I would have done that last time, I would have been way, way ahead. But I didn't, and I'm going to fix that.
Beware of the spreads on Cash App. They are brutal. Literally, they're $800 more expensive than probably anywhere else. And I do want to tackle something here. This people always they anchor on words, but they misconstrue them. What I said was the historic bottom for Bitcoin during normal cycles is the price right before election day in the United States, which would have been $69,600, $70,000. That's where James said the new low would be 70K. No. I said, if history repeats, I always use those terms, if history repeats. And by the way, we're $2,500 exactly from this level right now. So I didn't say that's the floor. I said, historically, that's the floor. But over to you guys, CTO, let's pull in a chart and let us know what you see. And how far away is 42K?
Yep. So believe it or not.
And the reason we mentioned this too is sometimes people wait, and I've seen this. You know, I remember when things like Solana fell to $8. People said, I'm waiting for $5. Tesla falls to $106. I'm waiting for $100. Bitcoin falls to $15,500. I'm waiting for $10,000. Sometimes people wait too much without doing the layering, which is so important. CTO.
Yep. So I'm a simple man, and the trend large line turned down here in October. That blue means down. Then it has stayed down, and it is still down today. And if we look at the dominating patterns here, we've had 2 of these flags or wedges, which means that price dumps, then it kind of consolidates a little bit in the other direction, and then it dumps another leg. It doesn't always look like this. It doesn't always happen like this. But if that repeats, you can see here that we're threatening to break down the second pattern, which basically looks identical to the one we had here from November until, when was it? 21st January, I think. So that is starting to confirm here. And often what happens is that the length after the pattern confirms becomes similar to the length before. So you get this kind of half mast almost. And if we just eyeball at that little bit, if this leg repeats, like just to understand, this drop here repeats after, we would actually come pretty close to those levels that you said, James, here, 42, 45. So that can absolutely happen. But just like you both said here, what I have found more successful than try to predict what's going to happen is to simply react. So if this turns up today or tomorrow, I'm not going to sit and wait for 42,000 in October, because that might never happen. Just like you said, James, especially if everyone thinks it's going to happen, perhaps something completely different will.
Yep.
So I will simply trade the reality. If trend turns up, if we get solid bottom patterns, I will be on again, regardless the price, regardless if we're at 42,000, if we're in October, November, whatever. And so far, we haven't turned up. Like, the trend is still down. This is not some sort of prediction. It's just summarizing what has already happened. And the trend is still down, and we're still kind of confirming another bearish pattern here, this bear flag. And I think something else that's worth noting is that on down days, Bitcoin tends to follow stocks. And the stock market looks pretty bad here. It has broken this key support. You see this level here is kind of broken. This is S&P 500. So I think that's what I meant, that it's kind of, there is a dependency to the world unrest, dependency to the stocks, and from there a dependency to Bitcoin. But Bitcoin has held up better than both stocks and gold the past couple of weeks here.
Yeah, and Bitcoin's just gone up $800 since we started the show, which is a little bit of a heater, not too much, but that's kind of where we are. So one thing I do want to say, and I always say, follow the money, because that's what keeps the price alive. We have Morgan Stanley coming in with 16,000 advisors. They have between $8 and $11 trillion under management. They're launching their own Bitcoin ETF with the cheapest fees ever. Marty, you saw that as well. The Morgan Stanley ETF fees, what is it, 13 basis points or 23 basis points or something? I can't remember.
Considerably cheaper than BlackRock. I think it's bigger than people realize. This is the first bank to issue an ETF. It's a massive move for the banking industry in general.
And and it's rumored with their 16,000 sales guys, Marty, they will recommend a 2% allocation to Bitcoin. You do the math, 16,000 sales guys, 8 to 11 trillion assets under management. If those customers did drop 2% into Bitcoin, the price would go straight to 224K. But that's a big if. We don't know if that's going to happen. Then when in Europe, the second biggest bank in Europe, 3 trillion assets under management, they're setting up for crypto as well. Does this mean anything?
Well, I think this is the first sort of like fee competition, which is interesting, like you said, because of advisor-driven flows. But I think it opens up the door for massive competition from all global banks. I think Morgan Stanley will be a catalyst for general banking cross-border ETF deployment. And if you look at the loosening of the OCC, you look at the current status of the Clarity Act, it just feels like the banks are positioning to enter the market. And I think the Morgan Stanley approval will be the catalyst. And it could explain these drawdowns. I mean, they don't buy the top.
No.
Players never buy the top. They manufacture a bottom. So that might explain the $60,000 move.
Exactly. They need to get in now because the heat is on to get this before it's through. And surprisingly, Michael Saylor didn't buy it today. But then we have something else bizarre happened. Rob, we have Elon tweeting Bitcoin with the grok image of a lady with a whip. And I know it's just a game, but all the Bitcoiners get very excited. Like they think, Elon's going to buy. So what do you make of this?
He's not buying.
Saylor retweeted it too. Well, you have to understand, he has over 20,000 Bitcoin between SpaceX and Tesla. So he has a pretty large bag. He's the 8th biggest or 7th biggest bag holder of Bitcoin today. Yeah. By my calculations.
People, so people will look at this and they get excited and they'll retweet it. That's cool. I mean, it's nice little hopium. But if you look at the thread, it was the thread before that was a guy who said, "Hey, Elon, animate this." And he had posted that. And then the guy said, and then Elon's like, "Yeah, sure." He threw it through Grok and it animated it. I mean, but here's the thing. Here's like, Elon's smart guy. I think at some point he'll get it. I know everybody was expecting X money to be the big catalyst. And then, we figured out that the people that got early access, like William Shatner, Captain Kirk said, there's no crypto. But maybe as time goes on, as it rolls out, it will be. But just be careful out there, everybody. Like, these are nice platitudes and this is cool and this is great. I think it'll happen, but just not like the big thing. But yeah, it was just something. It was cool.
Yeah, I learned about that guy, William Shatner. He's 95 years of age and smokes a cigar every day.
That's what you should do. You should do that. You should drink every day. The lady in France lived 104 years old, had a glass of wine every day. Nothing wrong with that.
Exactly. Interesting.
Good
Good health advice. CTO, do you read anything into this?
I mean, I saw it this morning. I felt excited, but then I think it's maybe a nothing burger right now.
Yeah.
Same like Rob concluded. I do hope that with X money that they introduce crypto in some way, at least down the line. I would guess they will, but yeah, we don't know yet.
Yeah. Good stuff. Speaking of crypto, there are some interesting things happening. Crypto adoption is off the hook. It has ramped up in a big way, and we don't know if these are real human beings or AI agents, but this chart took me a little bit by surprise just today. This is the chain monthly active users, and you can see here Solana's 113.1 million, but it's gone vertical. It was at 60 back in December, so it's doubled. Why? Maybe Marty, you have an idea. Binance number 2 at 40 million, Near 38.6 million. Near protocol, they do a lot of coupons in Asia for shopping. That's a large part of those users. Ethereum 14.7, Bitcoin 10.6 million. But everything's pretty much flat with this green thing. And we're not shilling Solana here. We're just looking at data. So don't be offended. We have another chart that tells something very different as well in a minute. But Marty, why is there so much growth right now? Is it AI agents or is it something different?
I mean, well, if you look at the estimates, I mean, some people estimate that 80% of blockchain activity right now is agents already. So,
or bots.
Or bots. Just remember, in back channels, there's a lot going on behind the scenes. You know, we keep saying the word people. It's always people do this. People are irrelevant, in my opinion, in crypto. They have been for 2 years, at least. This is an institutional asset class. It's an institutional technology. It was invented for institutions, for moving value behind the scenes, a better system than the current system. It's an upgrade to the technology of the ledger. And so if you look at Visa, MasterCard, Stripe, all of these institutions, they are literally building right now and testing. And I mean, look at the Solana 30-day stablecoin flows. It's now over $1 trillion. That's companies and institutions moving stablecoin liquidity between each other for regular business activities. They're just not using banks. And that is the purpose of crypto. That's what it's going to be used for. So in my opinion, this is just behind the scenes. There's a lot of activity at an institutional level, and most of it is on Solana. I've been tracking it very clearly that USDC has been issuing 90% of their USDC on Solana since October last year, since the 10/10 thing. So something triggered there. And that's what's going on. And actually, they're burning USDC on Ethereum. So they're sort of balancing out between Solana and Ethereum. And I think those two chains are going to carry predominantly the most stable coin, but they're going to be part of the financial system. No doubt about it. So these are agentics and tests and real world use cases of large liquidity movements. It's got nothing to do with people. People are, we do 1 or 2 transactions a week at best, maybe, the average person on a blockchain.
Unless you're degen perping minute by minute.
It's doing 10,000 transactions a day.
Yeah.
So I think that's what explains it. It's the advent of AI, agentic payments, and agentic commerce, and the preparing for a massive institutional announcement of together with the Clarity Act. I think it's going to blow people away. The amount of use of blockchain right now.
Yeah. So you think they're already seeding the activity almost right now?
Yes, they are testing and using the technology already. They're not waiting for permission.
And we know everybody's trying to get into the micropayment business.
I mean, James, anybody that watches whale transactions on any of these tools, I mean, I've been doing it for years, every single transaction, you'll see at least $100-300 million USDC transactions a day, 300-400 million. This is all new. This is accelerating in the last few months. There are hundreds of millions of dollars of value being transferred between unknown wallets. We don't know who they are. You know, they're smart enough now to get out of the meta tracking. They know how to obfuscate the stuff. But large banks and large institutions are moving predominantly their large transfers are going over the chain already using stablecoin. Remember, the Genius Act got passed now years ago, and it comes into effect January 17th next year.
Yeah.
What that means is January 17th next year, every merchant in the USA will by law have to accept stablecoin. It's a massive systemic change. So I think people are not aware because people don't really use crypto. They just,
Exactly.
There we go. That's my
But
opinion.
it's so funny because there's 30 or 40 million people in places like Singapore and Malaysia that use crypto without knowing they're using crypto. They use it to
There
get
you go.
shopping coupons. That's on, I think, Near Protocol. CTO, I saw you rubbing your chin regarding this chart. Did you have any ideas or insights? What's going on?
I was kind of surprised by it as well, and especially that many of the previous strongest competitors like Base and so on is so far down on this chart. It's 5.8 million versus 113 on Solana.
Yeah, there was a time where Base was nearly matching Solana in users about 15 months ago. Base came out of the gate hot.
It really did. It really did. It felt like they could perhaps have a chance to become number one, because a lot of people, they don't really care about decentralized. They care about permissionless. So, but yeah, this was really insightful and kind of a shocking chart, actually. And of course, great news for Solana.
Yeah, even more shocking one, Rob. This was flying around the internet last week. 44% of all crypto transactions are happening on one chain, and there's hundreds of thousands of chains. Does that mean anything, or is it all nonsense?
Well, I mean, it's good for my bags. That's always nice, and I think that's what's most important here. No. So, like, I mean, you take a look at Solana and the transaction. I always, for on-chain analysis, I'm always kind of skeptical and leery of it, because I'm like, well, how much of this is actually like, I mean, you can take a look at the agents, but how much of this is bots just going back and forth and back and forth?
A lot.
So the thing that I always look at is like, well, tell me the fees. Who's paying for this? And how much are you paying? And is it going up or is it going down? Like, I'll take a look at like DeFi Llama on the fees chart, and you'll see like there's a good amount of fees that are being generated by Ethereum, by Solana. But what I like about it is that it'll tell you like where the fees are coming from. And that's the big, now obviously we don't want like massive fees, obviously no one wants that. But if you can take a look at it, and like I'm taking a look right now on Solana for the fees that are being generated by the most over 30 days, it's pump.fun or wherever that place is. It's like 70, well, I'm saying it's like 70 million in 30 days. So like,
actually, I do have the fees here. Pump.fun does make a lot of money, but it's a Solana chain.
And Jupiter does, and Solana and Jito and Sanctum.
But the real money maker is Hyperliquid. Again, if you look here, the top players, biggest money maker in crypto is Hyperliquid, 51.3 million. Solana is number 2, 20.8, and ETH is number 3 at 15.2. But that Hyperliquid, everyone wants to know, is this thing taking the world by storm? And what was interesting about Hyperliquid is it used to be used just to perp, Bitcoin, Ethereum, stuff like that. Now they're perping everything, oil, gold, silver, and they're making huge fees off that. And this is run by a bunch of Wall Street guys too. So all the big perpers, like the $100 million traders, they do it all on Hyperliquid as well. So back to your theory, Rob, of follow the money, this means Hyperliquid is hot.
Yeah. And you can see it like, you can see it here, you can see it there. Like mine's a little bit, I take a look at Hyperliquid, chain, and it's like 60, like in 30 days, it's got 67 million. I think yours is a little bit different, but it's a lot. And that's why it's grown so much. And that's why, is it in the top 20 now? Yeah, I think it is.
It is, yeah. But the thing is, it only has about 12,000 users. So it's got the same number of users as Cardano, but the users spend a lot of money on the chain, which is fascinating. Can you imagine? Well, they wouldn't be able to have 1 million users because it's only the ballers that use this for perp dexing. But any insights into this one, Marty, at all?
Yeah, I mean, I have my theses about this. I mean, I think this is just Hyperliquid, just a preview of what's coming. Remember, the New York Stock Exchange and the CME are both launching tokenized equity 24/7 trading on their own platforms using, what they call the ATS, an alternative trading system. This is all sponsored by BlackRock. So, I think that this Hyperliquid experiment has been very successful, but I think once these guys turn these things on, which is scheduled for Q2, which is now April to June, I think, and this is SEC and DTC regulated, I mean, talking trillions of dollars. I think it's going to dwarf all other fee generating use of tokenized systems. I think these things are going to just blow it away. It's going to be massive.
Interesting piece here from Vegan Parrot. Just wait for Hyperliquid to get KYC'd. If that did happen, it would disappear, because a lot of the bowlers that are trading on this tend to be offshore, and they do not want to be KYC'd.
And also, I mean, it's decentralized. I mean, a lot of people, if I'm glamming $100 million, I don't want people to know about it.
Yeah.
And actually, CZ, to his benefit, made that statement years ago. And I think it's true. I mean, I think there's a certain audience that kind of want people like Mochi or, high-profile influencer traders who want it to be known. But most people don't want to be known. Definitely not institutions. The large money is never going to be wanted to be known. So I think that user base is indicative of what it will ultimately be. I don't think it'll be a large thing. I think it will always be a sort of a niche.
What was that guy's name? James Wynn. He made $110 million on meme coins, and then he was publishing himself. Oh, I'm going to short Bitcoin at whatever 110K, and he just got hunted by the Binances of the world and others. So you're dead right there, Marty. When you publish your position, you're setting yourself up to be a target.
Oh,
CTO,
I mean,
or sorry, would you agree with that?
Well, right? Why would you do that?
Yeah.
I'm a fan of Hyperliquid. I think it's great. And like you said, there are several benefits for some categories of people, like the people who don't want to be KYC'd. I cannot do that, but there are definitely people for who that is important for. They might disappear if they get KYC requirement. But I think there is another benefit also. Like I just before joining, the guy in my community, he was really struggling. He wanted to short the stock and he couldn't find how to do it on his platform. It was complicated. He was trying to call his bank and thinking if he has to sign up for some other platform and so on. Hyperliquid have solved all that. It doesn't matter if it's Ethereum or BNB or Tesla or some other stock. It's just like a ticker, and it actually works just like a coin. So they have really simplified something that is traditionally quite complicated to do on many platforms. And I think that value will really pop up, and probably there will be other competitors who do the same thing, but kind of simplifying this whole thing and bringing the simplicity of crypto that we've all gotten used to into the traditional world. I think they have done that very well. And like you said, I mean, otherwise, how do you short oil? Remember that guy in the previous, that time when oil price was negative, who didn't realize that he actually signed up to take delivery for like 2 oil tankers of oil, and they start asking, where do you want it? Where should we put it?
Stick it in my yard.
He didn't get it. So maybe coming from the crypto space. So I think all those simplifications, that it's just a ticker, you can trade it on the way up or down, you can short it, you can long it with some leverage. I think they've done it beautifully, and that will come for sure from many providers.
It's a funny one there. I see Rob laughing too. But we just had some breaking news. Let's interrupt the show for a second. Cynthia Lummis just confirmed the Clarity Act is done. Going to happen. And it'll be hopefully put into law pretty soon. The final version will be released within a week or so. Is this a nothing burger, Rob? Or is this going to open the floodgates and be a catalyst for the crypto space?
Let's hope it is, but I'm pretty taken aback by this because I didn't think that they were going to get this actually done. But I said, you know, like, I mean, there's no reason as time goes on, because we're in a midterm year, there's no reason for the Democrats to allow this to actually go through, because they don't want Trump to have a win. So why would they do that? It comes in here. You say here, stablecoin yields unlocked. That's got to be interesting, because from what I understood, it was like that was not going to happen. The banks were going to go it. And then the big thing is, was there any kind of regulation for de minimis as far as taxation? Because right now, for Bitcoin, it's all capital gains. So how can you use it as a peer-to-peer transaction? Very difficult to do. And then the second thing was, did they do anything with the double taxation of Bitcoin miners? Bitcoin miners get taxed when they actually produce it and when they sell it. And if that bill comes out and those two things aren't addressed, what are we doing here?
Yeah.
So I mean, I'm glad there's a bill, and some people will say, like Brad Garlinghouse will say, let's just roll out a bad bill. Bad bill is better than no bill. I happen to disagree, but we'll see how it all turns out.
Yeah,
Great.
Brian Armstrong was fighting it hard. And regarding the yield, there's workarounds for that yield. If you are active, you get points. It's kind of like air miles almost.
Frequent flyer miles.
But let's go to our expert, Clarity, Mr. Clarity. Let's go, Marty. What does this mean? Is this
First of all, where
good
did
or
you get that news, James?
bad? On Merlin the Trader on X. I'll share the tweet right now.
I'm just
in the
looking.
chat.
Loomis herself hasn't posted anything yet, so that might be for.
Yeah, she's on TV actually, live on Capitol Hill, on CNBS or one of those channels. But yeah, so we'll see. You know, she did say a week or two ago it was 99% done. So she's.
I mean, the
confident
biggest thing in clarity is the categorization of crypto officially in law as a commodity. And what this means is that large institutions like pension funds, insurance companies. I mean, I used to back in the day work on a project at an insurance company. And I don't think people know this, but they don't make any money from insurance. They make money from investing the premiums. They're investment companies, things like that, annuities. These institutions, by law, cannot invest in anything unless it's a commodity. So this Clarity Act, once passed, unlocks Bitcoin and all regulated, layer ones as commodities, which means these companies can invest in them. I don't think people realize this is trillions of dollars.
Yeah.
So that's why it's such a contentious thing. That's why it's been so hard to pass. That's why the banks omnibused in all the stablecoin yield to try and slow it down. In my opinion, the Clarity Act is bigger than the Genius Act. It unlocks, potentially a liquidity downpour into our asset class.
Yeah. Let's talk about how, if we think bigger picture, we have to understand big money. If you wonder why things happen in certain countries, it's because of puppet masters that control all the money, control all the politicians, etc. A simple way to think about it, at least the way I think about it. What does this mean for global financial rails, central banks, all that type of stuff? Marty, you got a theory about Iran on this one?
Well, I mean, in my opinion, I mean, just based on, it's also been supported by a lot of other economists lately, is that the reason the US attacked, obviously, Venezuela first, which came out of nowhere, the narrative was drugs. Then they attacked Iran, came out of nowhere, the narrative was nuclear. Once again, the theory right now is that that's absolutely untrue. The theory is that the world is trying to, and it's BlackRock, JP Morgan type cartel, is trying to improve the rails, so make a technology rail. That includes payments, digital dollar, stable coins, sort of an outsourced CBDC. I mean, we know that that's what a stable coin really is. And ultimately, there were two central banks standing in the way, which they called leakage. So they were leaking, basically Iran was selling oil to China using crypto and spending the money on weapons and militarization. So they eliminated them. So in my opinion, I think it makes a lot of sense. And that's sort of what's going on. I think ultimately stablecoin will become the new petrodollar. And this war is all, in my opinion, a facade for this process. And at all times, very clearly with the May 15th Federal Reserve change and things like that. So there you go. I think that the Iran war was just a big Trojan horse to try and eliminate the Iran central bank, which was, dealing with China illicitly and Venezuela before that. And those two stop gates have been shut. And I think
Iran was mining a ton of Bitcoin as well.
Oh my God, they were mining it for 1,320 and selling it for 100,000.
Yeah. CTO, any theories on the rewiring of the financial world with crypto as the new rail?
And digital ID. Don't forget, digital ID is involved.
That's not good.
Just to say, I'm not sure it has passed. I'm reading the comments under this Merlin, the trader. There's some
also haven't seen official.
skepticism. Grok is saying it was recorded.
It's not passed, but she's basically saying it's a done deal, and we'll get the final version in 1 or 2 weeks. That was the message. Not that it's passed, but she says it's in the bag.
Right.
Yeah.
Grok is saying the video was from a few days ago, but I'm not sure. I haven't checked.
Okay.
So let's see. But I mean, for sure, the traditional system is going out. It will be tokenized assets like Hyperliquid demonstrated. It's better, it's faster, it's cheaper. I saw some comparison, like Hyperliquid has 12 employees or something. Robinhood has 4,000, and they can basically do the same thing. So that's the cost saving we've talked about on this channel for a long time, and it will come for sure. We have the AI portion that will accelerate it. They're not going to send credit cards to each other, the agents. And everything is getting digital, and digital money on the internet is useful. It's like we concluded many years ago. It is happening. Digitalization is accelerating, driven by the synergy of all these trends happening. But of course, it's slow changes. But digital money on the internet isn't going anywhere.
James and CTO, another massive thing people don't talk about with Clarity that is widely missed is if they pass Clarity with the current markup, then instantly companies can IPO as tokens. So raising global capital for the first time ever. So it's a reinvention.
That would be huge. I hated and loved the ICOs at the same time back in 2017. I thought the idea was so good, and some companies really demonstrate. Like Ethereum was an ICO, for example, and that guy Vitalik with his math skills, but maybe not the world's greatest social skills, he could never have done an IPO. Like if he had gone and he had to do the board
roadshow
presentation in a 3-piece suit and so on, he would never have gotten the money. Everyone is like, who's that guy? But because he could do it as an ICO, he actually got the money. He could develop Ethereum, and it gave birth to the whole programmable blockchains, one of the greatest innovations of this generation. And there were some other good ones also. But as well, it came one good one and 999 straight up scams. But the idea to raise money on the global market, where someone has a good idea, I think it's a great idea. And instead of locking it in and saying that if you're not already rich, you cannot participate because you're not qualified. And that's a trend that has happened. We see all these companies now, OpenAI and so on, the Anthropic. You cannot invest in them you couldn't invest in them as a retail investor. You had to basically be rich already to be able to get in. And I love the idea that you should be able to raise money from everyone, that everyone has a chance to participate. But what was lacking then was some sort of regulation. And now maybe we're getting that. So we can get that people, some, young guy or girl with a bright idea can actually raise money for their idea on the global market, while there is some regulations. So you can't go out and just do a straight up scam and run away with the money and then nothing happens because it wasn't regulated.
That's a very good point. Rob, you seem to be excited by this too.
Well, yeah, ICOs, people can go in the background and actually pick it up. I got in 2017 when I got in, ICO craze was just going crazy. Imagine the gains we could have had from those, but we couldn't because Americans are not allowed for that. There was ways around it, but I didn't want to do it. But yeah, that's great. I think even Coinbase didn't they launch their own ICO platform not too long ago? So.
Yeah, the Coinbase are really trying to. It's funny because we're seeing a convergence as well around this area. We've got the TradFi and the fintech firms coming into crypto hard, like Robinhood and others, and you got Brian Armstrong and Coinbase doing the same thing with the Krakens of the world and Binance. So super interesting time. We've got 2 more stories I want to cover. MicroStrategy They didn't buy today, surprisingly enough. I didn't see any announcement unless I missed it. But they are the only DAT buyer. So if you imagine all of the treasury companies on the planet, MicroStrategy is buying 98% of the cheddar. The other DATs are buying 2%. It's probably MetaPlanet on the other 2% side. And that's shocking. So a lot of people pin their hopes and dreams, like Tom Lee and Bitmine, to datting up like hell. And that really went sideways for him. Any thoughts on DATs? I forecasted 1 or 2 years ago that it could trigger a bear market if the DATs are forced to sell. And we've already seen that happen with Marathon and a lot of others. Riot, I think CleanSpark sold a little bit. Some of the treasury companies, Bitcoin miners, etc., are beginning to offload. And we saw a thing called Nakamoto, go under, or at least it's 98% down from its price. Rob, you seem to be smiling.
No,
what do you think of this?
Because that's Bailey's company, and he lives in Puerto Rico. And,
okay.
And I got to laugh because like I heard him talking about it. I'm like, I don't think it's going to work out. But, here we are.
Was he in the government or something, that guy Bailey? Or an advisor?
He's an advisor to different parts, but not particularly the government, especially not in Puerto Rico. But as far as like being asked to be like given his opinion, yeah, somewhere around there. And not that I'm smiling that it's down, I'm just kind of like reminiscing about how it was hyped up and how great it was supposed to be. And then here we are.
Yeah.
Which is like a lot of things in crypto, let's be honest.
Yeah. Marty, any thoughts on the treasury companies and the fact that there's only one game in town?
You hit the key point, and that is that MicroStrategy and MetaPlanet just continuously buy. Clearly, that's part of their strategy, and they have infinite resources to do so. It's just quite astounding, which always makes me beg the question, are they somehow affiliated with, some form of strategic Bitcoin reserve strategy? Where's the money coming from? It's just infinite money. Michael Saylor said, there's not enough Bitcoin that people can sell that we can't buy. It just feels like it's a transfer of ownership rather than buying and selling. Just feels like they're pushing out retail and buying it up institutionally, and that supports the thesis that it's becoming an institutional asset class.
Yeah, and we're actually going through what I call the third cycle for MicroStrategy. August 2020 kicked it all off. Then we went through the bear in 2022, and then recovered, and then it went to the moon. Now we're in the bear again. The question people have is, if you had to pick a horse, MicroStrategy or Bitcoin, which is faster? We know that MicroStrategy still has Satoshi accretion per share. They have leverage. They've got STRC. So typically, it'll compound faster than spot Bitcoin. CTO, could it be third time continue the same trend here? People want to know, or just enjoy the 11.5% on STRC and say that's enough for me? What do you think?
Yeah, the high yield proposition in crypto. I believed in it once. I don't know. Maybe I've been burned too much on that one. I think that it's such a nice proposition, but I think I have to accept that if there is high yield, there is also some element of risk you're taking. There is no such thing as guaranteed 11-12% per year yield. There is a risk somewhere in it. And then whether that's a good risk reward or not, I think everyone have to decide for themselves. But I do think a lot of people will like it. We briefly talked about it last week. Like, could it even be so that this is such a good proposition that is enough to turn Bitcoin around in itself? Like, so many people want, like, okay, wow, 11-12% yield on Bitcoin, and I can, maybe also get exposure to this new asset class, and I get this amazing yield. Maybe I should buy some. Could that be enough to turn it around? Maybe.
Well, in the space of 8 days, they bought 40,000 Bitcoin on the 9th of March and the 16th of March. 40,000. So, and a third of that was funded by STRC. So, we mentioned insurance companies earlier. Guess who's buying STRC for the yield?
That's the point I was making, James. I believe institutions front running Clarity and buying STRC for for the yield.
Yeah, it's
They
crazy.
have infinite resources, infinite amounts of money.
Yeah, and I mean, if they're getting 3.5% on a treasury or a tax-deferred yield, I mean, it's a bit of a no-brainer. But there is, of course, that risk. But that risk, I think, is small. Anyway, let's get into the final story. Wrap this up. This is kind of near and dear to my heart. This is AI, CAPEX, hardness, oil, commodities, commodity boom, scarcity, Bitcoin. We have a situation where the hyperscalers, the AI companies, they are all spending a lot. Meta, Alphabet, Microsoft, Amazon, they're spending like $600 billion to $1 trillion over the next 12 months on things like data centers and NVIDIA chips and all that type of stuff. And then you got this outlier here called Apple. Apple, they're staying away. It's like, no, we're not doing this AI stuff, AI lark. We'll outsource it to Gemini and other players. Now, the question is, there will be a casualty here. I can guarantee you that. Somebody's going to die. I don't know if it's Oracle or Meta or whatever. But in the age of AGI, it goes back to what we've discussed before, buying all this hard stuff, physical infrastructure, chips, when does it start bleeding into assets that actually have a moat and are very scarce? Things like Bitcoin, things like companies that make stuff that actually generates value fast. One of the big exposures I have is Tesla in that regard. Any thoughts on this? We'll go to you first, CTO, because I find this fascinating, the amount being spent. Is Apple playing a blinder here? Or the others going to completely dominate? Because there's no such thing as winner. There's many winners. There's only one winner in any particular space.
Yep. I saw this one also. I was equally shocked and astonished over this chart. Of course, we kind of know it, like Apple, who has been such an innovator, they just decided not to do the AI at all, which is the biggest revolution of these years. By far. I'm still, amazed. I programmed AI in 1992. That is now, what is it, 30 plus years ago. So, but now it's happening, and Apple isn't on the boat. And financially, probably smart, at least short to medium term. They just license a model instead and plug it in and done. They didn't need to spend $1 trillion on data centers. But yeah, what happens from here? I mean, AI is I wouldn't say everything, but it's a lot, guys. I mean, I'm blown away every single day. I don't know. It could be a huge mistake from Apple. Maybe it's what will, be written in the history books of their biggest mistake. I don't know. But at the same time, the other ones, they're investing a lot, as we can see from these charts.
Yeah, and there will be casualties.
Capital drops.
Yeah, definitely. There will be definitely some casualties along the way. Any thoughts?
Apple's always notoriously been lower CapEx, though. So this is kind of, based on history, similar. They've always kind of do this. They've always seen us sort of being disciplined, right? They sit on a lot of cash. I mean, I think they also want their devices to run, the processing itself, like on their new chips.
Yeah.
Keep it off the cloud. As others don't have a device. Other AI people don't really have a device. So I think they have that unique difference. But I mean, their move to Google's Gemini, I think, is bigger than people realize from OpenAI.
Oh yeah,
that's a big decision. So I found that to be interesting.
And Google have been making their own chips for years. Yeah,
Marty, something, because I think you touched on something very interesting. Like Apple is really banking on that we will run AI more locally, like their latest M5 chips. That's the biggest addition. It's massively faster for running AI than the M4 chips, and they're going to come out with new hardware, like Ultra, M5 Ultra, and so on, to really step up the game on that. But I think most people is not using that today. We're using AI from some data center. What do you think will happen? Are we going to run local AI, or is it a mistake? Will it be like data center AIs in that?
Yeah, I kind of agree with you. I think technically there's a missing piece. and I would call it lagging. I feel like they are lagging, or it's a big breakthrough announcement pending from Apple, some form of private cloud compute, right? Which would give them a huge advantage. Remember, this can flip on a dime. If private cloud compute and LLM takes off, then Apple has a massive advantage. They have 2 billion devices out there in the world versus the others which have none. So I think I don't count it out, but technically I agree with CTO. Right now, there is no evidence that there is an advantage to having it on your own device, whether it's capable, whether the M series and A series chips are powerful enough to run neural engines and things like that. But, you know, it's just one breakthrough away or one announcement away. So I'm not counting it out. And they have so much cash. We'll see. I've notoriously been short Apple, by the way, over the last years. I do think Apple has had a good run. And I feel like it's time for, you know, somebody to jump back in and take over the reign. I've also always thought it would be Tesla.
Yeah. So I got two theories on that CTO as well, if I may. One is we now have Chinese models that are small enough to run on a device, like Quen, I think 3.5 will run on an iPhone, even on airplane mode in a plane. That's the first thing that's going to happen. Is the model's going to get smaller. That means things will go to the devices and less reliance on data centers for inference. The other thing that's going to happen, which is going to be completely mind-blowing, is I think everything's going to move to the edge. You'll be able to talk to your fridge or your car. I'll be able to talk to my refrigerator and say, hey, call Rob. Tell him to jump in the pool. Or in your car, you talk to Grok, and the Grok does the inference between Starlink connectivity and the AI chip in the car and stuff like that. Things like iPhones will go away in the next 5 years. People will still have phones, like they still have flip phones today. A very good use case for drug dealers and such. But you'll be able to talk to anything, anywhere, wherever you are. If you're in your house, your Google Home device, your fridge, your computer, your car, that's where it's all going to go, and it's all going to be holistic. Is that too far out there, or is that crazy?
I think architecturally, that's exactly what's going to happen. 100%. I think soon your car will have a incredibly powerful processor, and that's pretty much what you'll use. But I think the important thing for people to understand is that these other companies are hyperscalers, and that's a big word that's thrown around. But what it means is they make money by selling compute. Their primary business model, this is Microsoft, Google, Amazon, is to sell compute. Apple is very different. They don't do that. They sell hardware. They don't need data centers to monetize their AI. So they're very different. So that's what I think explains that chart.
In fact, a guy called Dennis Porter just tweeted that he one-shotted his back-end system for his charities, and he works closely with the government around Bitcoin. But he basically saves himself now $5,000 a month because he was able to, and he's not a developer, but able to build back-end systems for his charity. Rob, what do you make of all of this craziness? Everything is going to change in the next 5 years. I want people to be very aware of that. But how do you position yourself for this change? What do you think of AI, the edge, new devices?
I have no idea. I'm still waiting for my flying car from 1980. So it's anybody's guess where it's going.
You got it ordered. It's coming. We might get an unveil of what that flying car looks like pretty soon too. Yeah. At least it might be reverse flying, so it has some type of suction that keeps it stuck to the ground. But with that, everybody, we've kind of covered up the big stories that I wanted to talk about. Markets are looking good. It's not, what's crazy about the market right now is oil is going up and stocks are going up at the same time, and Bitcoin and crypto are going up at the same time. That is the first time I've seen that happen in 3 weeks. Unusual. Any idea why that is, CTO? Sorry. Might be muted.
I actually don't know why it's going. I mean, no. Yeah, everything is up. Everything's up today.
Yeah.
And I guess it's just one of those days. It's probably the DCA pump. That's the only explanation.
Yeah. We get the Wednesday midweek sell-off and then strength into Friday. I don't know. Everything depends on Hormuz. One word. That's it. In the meantime, we need to layer, stack, DCA, Cash App, whatever. Interesting times. I want to thank Thank you, Rob, for joining us.
Thank you, guys.
Thank you, CTO.
Yeah,
as
I
well.
think to summarize from my perspective, I think everybody, if you want to know what the trade is, obviously own AI stocks, and if you want a good deal, I think they're coming. Just be patient. I think, like James said, the Strait of Hormuz thing, I think won't be a decisive, rapid victory. I think it's going to be extended. Operational distractions, oil spiking, the petrodollar mechanism will come under stress, and then the typical scenario, right? Foreign central banks will sell U.S. treasuries, borrowing costs will rise in the U.S., the Fed will step in, significant balance sheet expansion, global liquidity will boom, and which assets will be the ones which are most sensitive to liquidity? Bitcoin and the AI stocks, probably. And that's your chance. Be ready for it.
Global liquidity and Bitcoin correlation actually completely failed, but it did work for 12 years. Maybe it can make a comeback. And if it does, it is deeply deviated from where it should be, which is kind of interesting. And then I go back to gold and silver and look at where the market cap of Bitcoin should be if they had parity, at least with silver. Again, we're back to $200,000 Bitcoin. Crazy times.
Crazy times.
Okay. Thank you, gents. Have a
Thank
great
you,
week.
James.
See
Thanks,
you all
everybody.
next week.
Fantastic.
Enjoy the talk. And thank you to the mods in the chat and everybody else here. Bye-bye.
Bye.
Have a good one.